Good afternoon, everyone. Today, I'm going to be showing you guys how to come up with your daily bias. Today's Tuesday, August 4th. Today's been a green day, but if you don't know how to come up with the logic or theory to take advantage of the executions during these days, or even have a daily bias that's on side with moves like this, then you need to have a specific way of looking at the charts and specific things that you should be looking for to give you that bias. Every morning, I start out doing the same exact thing. I will look at the daily chart. This tells us just about everything you'll need to know. And if you can't get a clear picture on the daily chart, I recommend just looking at the weekly and formulating a vague idea from the weekly and then refining it on the daily chart. So, what do we even look for? Well, for starters, you could just look at the trend and we're making higher highs, okay? So on the weekly chart, this is bullish, we're making higher highs. We have a low here, high here, low here, high here, low here, high here. Okay, doesn't take a genius to see that. You just kind of have to see that we're making higher highs. So from that weekly perspective of making higher highs, go into the daily. And now you can get a little bit of a better picture on where price is going. So if this is your first time looking at the daily chart, this could look a little confusing, especially when we get into this price action here, but I'm going to show you guys exactly what to be looking for anyway. So making higher highs right here, October. We make a low, higher high. This low comes in and takes out this low. Okay, this low takes out this low right here, but we're still in a bullish market, even though we're coming in to take this low. Okay, price barely comes in and takes it right here. These are just things I'm looking for on the daily chart. Is a bullish order block. Price taps at once, makes a new high. Couldn't keep that momentum. Had to take this low before making a new high. Okay? If you're just looking at this, this could look like a consolidation up here. We came in, broke this short-term high, made higher highs, and now lower lows, lower highs, okay? But we did come take this high once, twice, 3 times. But during this whole move, okay, another bullish order block here. You'd be looking for price to respect this after we come in and break this high. Do we do that? Well, we close below it here, but then the very next candle rejects it. We make a new high, but we don't close above the previous high. That is an indication of one thing happening over another, okay? Price comes down, takes this intermediate term low, and this intermediate term low. So at this point, you could reasonably say, okay, price wants to come down just a little bit further, and this is all in February. Price wants to come down just a little bit further before breaking this high. Okay, we get that price movement. But you see how when you look back a little bit, you just zoom out, you can start to see things a little bit clearly. Yes, we eventually tapped into this bullish order block down here. Look at that imbalance just down here. Anyway, we get a tap into it. Okay, instantly get a close above it. Okay, not only that, but this up close candle closes above this candle. So this is a change in state of delivery. Extreme bullishness after tapping a bullish order block, and we are in weekly bullish price action. Okay, I just wanted to show this example before going into today's sort of range. Okay. So now let's look at July, August on the daily chart to come up with our daily bias for today. Obviously the market's already in business, so that's 11:23. But I'm showing you this because you'll be able to see trades before they take place and get yourself on the right side of the market a lot more frequently if you just look at price action the way it's presented here. Okay. Price is making higher highs, higher low, higher high, lower low. Where does this reject off of? Well, we have a bullish order block here. Buy side imbalance, sell side inefficiency, with little volume imbalance. Bullish order block at the high. Okay. Even if you don't see it all that here after this down close and say, okay, we barely took out this high. We did take it a couple days, but no big price movement. And then we have this down close, bullish order block, up close candle here, up close candle here is what you would be looking for price to come down to, okay? Once this is invalidated, i.e. the low of it is taken out, this is your next target. The price is going to reject on a bullish move on the high time frame, then this area here might have high sensitivity, okay? We get a tap into it, we make a new high. Okay, just barely. Okay, but since this high didn't really take it out on a closing basis, at this price, you can expect price to come into this range for one. Okay, and if you're expecting higher prices, June, okay, where might you expect price to reject off of? Well, if we have this range and you're expecting price to come into it, this is your bullish order block. So, meaning if you're bullish, price can come here, and price is up here right, at the time we're looking at this. So if we're expecting price to reasonably come down here before we trade long, okay, to come take out this high on a closing basis. We close the gap, price trades to it. Now, same bit of business for this down close. Price decides it wants to take out this bullish order block. We could reasonably look at the next bullish order block here, here, inefficiencies to see where price might drive to. Okay? But you could see just within this range how you can identify the price action, and it might not get there the next day, but you're just looking for this signature, okay? These levels to be utilized. So if you're bullish, you have high, bullish order block, this gap, okay? Well, none of this matters. How do we find out what's going to happen today? I'm going to take you on a chart to block out today's price action, and we're just going to look at it like this. So from this perspective, okay, we took out the low, lower high, lower low, inside this bullish order block, yes. Did we tap in this first one that we initially rejected off of? No. Okay, what did I say this bar was? A change in state of delivery because we closed above this down close candle and we're bullish on ES. So this constitutes a change in state of delivery for a run to the highs, okay? What do we get right here? Right after we tap into this bullish order block. Change in state of delivery, right there. Anyway, change in state of delivery is right there. So from this point, this high can reasonably be taken out, okay? How high can price go? If you're looking at price action just like this is what you would have been looking at before market open today, okay? And you're trying to project price higher. You're trying to see, okay, if the weekly is telling me we're going up, the daily is now telling me we're going up. One change in state of delivery right here, one right here, bullish order block. Now we know we're going up, okay? We already closed above these highs. So you have this up close candle, the high of it, this wick, that you'd be looking for. So I will grade that just as a reference point, okay? But right here, this extreme bullish price action right here, creates a suspension block. This suspension block, you're going to want to zoom in. Okay, so now you have the wick high and the daily suspension block. This dotted line is the daily high. But again, if you're focused on today's price action and you're expecting prices to move higher, then I will show you what to look at. Before we go into the 1 minute time frame or the smaller time frame, just note this wick high by the blue dotted line, the wick, this volume imbalance. And then we'll go into the 5-minute chart. All the price action we're going to be focused on is before today's market open. Yesterday, big rally up, creating the volume imbalance. We can see down here. Okay. Now, that high was taken out at 2 a.m. after the market had closed last night. After we settled up here, had a really bullish close on Monday, and then we came in and broke all-time highs after hours. Okay, I'm going to bring your attention to 12 o'clock midnight Eastern Standard Time. Midnight open. I'm going to just make it a little thicker for you. Okay, if you're expecting higher prices, okay, higher prices, and price is coming down after midnight, anything after midnight would be a discount. Okay, so initially after midnight opens, price comes up, takes out the high, takes out the all-time highs after hours, okay? And then price comes down below midnight's open, okay? We have bearish structure on the 1 minute, takes out intermediate term low. This is the low of the wick, okay? Premium wick on the daily. Remember that? You see how up here we stopped at 50% of the wick, came right back down, and then we closed right inside of it. So it's using this premium wick as price sensitivity. There's order flow in here, okay? After midnight open, you would want to see price trade below it. Anything below it should be supported by bullish prices, okay? If we're looking at the chart like this, intermediate term lows taken out, making lower lows, okay? Lower lows. Realistically, where might price come down to? Bullish order block. Bullish order block right there, okay? You wouldn't just take a buy there. You would want to see something else, but what do we get here? We take out an intermediate term high, okay? Down close candle. Where does price come down into? The other down close candle. Do we make it all the way there? No, not quite. You have an bullish fair value gap here. We just distribute to the low of it, not tapping the bullish order block, okay? Change in state of delivery right here because we're bullish, okay? And then price comes back up to midnight open and rallies higher. So you'd be looking at midnight open to support price to the upside, and it does that right here. So any more reference to midnight open should be bullish. Anything below it should be really bullish. Okay? Again, just for reference, the high, all-time highs are marked out by this blue line. So now we're trading above it, right, going into 8:45, 9 o'clock. Okay? I'll show you 9 o'clock, 9:05 right there. From this price action now, if you're not trading until market opens at 9:30, but you're looking at this, all this here saying, oh boy, prices just came up even higher. Okay, midnight open, prices supporting to the high, to the buy side. Where do you even buy in on? Okay, how high can this go? Well, I don't know exactly how high it can go. You're trading all-time highs, but I do know that if you look at the price action from 7 to about 9, 7 to, let's say, 8. I do know if you look at the price action from 7 to 8 o'clock, okay, even with just a small fib, you can start to look at projections higher. Okay, these aren't perfect, but you know, they are projections you can use. This is just going off of 0.5, -1 on the fib. Okay. So you could use those projections as targets. But where do you buy in on? Okay. Spoiler alert, we know price action is going to trade higher today. But we're looking at it from the perspective of if we are not seeing anything and the market is yet to open. So all we have is this here. Okay. Now looking at this from market open, we have this buy side target, sell side here. What is this right here? We have a wick coming down, barely, not quite tapping this bullish order block, bullish momentum, down close candle, not quite tapping the high that we made, all-time highs. And then at 9:01, we break intermediate term high. Okay, this is on the 1 minute now. So you're looking at this from 9:01. Okay, if you're looking at this from just structure, purely structure, trend following system, okay, and you have a confluence of I'm bullish on this, I want prices to go higher, you're breaking down here. Price is breaking down. We'll make a lower low right here, lower low right here, higher low. I'll just make this blue. This high is broken here. This is your bullish order block. Once this high is taken out, yes, you have one down here. You don't have a change in state of delivery with one bar, but as you're seeing price take out this intermediate term high, we tap into, barely, don't even come tap the bullish order block before bouncing even higher. Okay, this is extremely bullish, so you might not get a big pullback in the market open. Again, short-term low, short-term high, barely gets taken out, and then we get a rip higher, okay? Taking out 0.5 and eventually 0.1. But again, if you're looking at this from the perspective of, hey, I just want prices to go higher, I'm looking at prices to go higher, how do you trade this? Well, now that you're getting into New York market open, you have bullish order block down here, bullish order block up here, but let's use this one. What's this? Fair value gap. Okay. Notice how this 0.5 projection level gets tapped into here. But again, you might not get a pullback because price is so bullish. You didn't get a pullback into this bullish order block. You have a fair value gap and it just rips higher. Here, this is considered a breakaway gap. Now, so when you're getting this price action here, this is considered a breakaway gap. Okay? Where's the next inefficiency? Right there. Price comes into it, trades just at the low, change in state of delivery right here. Now, as a general rule for myself, I try not to trade before 934, 935. So, as I'm seeing this high be created, I'm waiting for a pullback, i.e. down close candle. Now you do have this down close candle, which would act like a bullish order block, but you'd be looking at this inefficiency more, okay? Why this one? Well, if we're identifying really bullish prices and this can act as a breakaway gap, this is your next inefficiency here. We come in, take a short-term low out, change in state of delivery. Okay. Stop loss, one tick below the low, right here. Yes, you could target this one, but you would probably target even higher. If you're expecting this high to break reasonably. Okay. Get rid of those projections here and add some new ones. If I'm long on this change in state of delivery, so if I'm long here on this change in state of delivery with my stop loss below the swing low and my entry at the high, I want to get a projection for how high this can go. So I'm going to look at the range from 9 to about 10. Now obviously I'm in the trade before 10, but I'm just going to mark the 936 high for now. So if I put projection 1 just at 76.85, just a tick below it, that's a 3.47 R. Okay. And then price trades to it. Okay, but what if you didn't want to take that long entry? and you wanted to wait for this high to get taken out. Well, this high gets taken out here. Change the state delivery. Where's your bullish order block? Is right there. The high gets taken out. We tap the bullish order block. Stop loss at the low. Take profit at the high. Okay? But what if you miss that one? Oh, well, lucky you. You get another one. Another entry. Tap into the bullish order block. Another projection up. Now, today ends up being one of those really bullish days where if you would have just trailed one, you could have probably made a family fortune. If you just trail one contract. One. Oh, let's say you get stopped out here. Okay, that's still a 6R. So as long as you can identify daily bias like this, and you're on the right side of the market, you can reap the rewards of these moves like this. So when you could start reading price action like this and seeing the pre-market as your biggest indicator basically on where price might go. And I haven't even showed you guys this, okay? You go into regular trading hours. You have this big ass gap here. No? And then price opens higher, leaving a fair value gap on a bullish day, taking out this high. We're already above all-time highs. Guys, that is a breakaway gap. All this is a breakaway gap. Wow, look at that. You see how the midpoint of that breakaway gap is midnight's open? Wow. Wow. See how certain levels like this, when levels are stacking up on top of each other, telling you, hey, this is a protected level. Like, if price comes down to here, that's really not a good sign. And look at that, price just runs away from it. Okay. And you might be asking, why is this a breakaway gap? Well, it's not going to be like that every day, but if we just take a look at yesterday, hey, we have another one. We have another one. But yesterday we came out, took sell side, took the low, took the pre-market low before running up the buy side, okay? So this is a breakaway gap on yesterday as well. Okay. A lot of people took this trade. Hey, look, what do we do? Took the sell side. You guys won't, some of you guys might not see this as a Judas swing in the opposite direction, but came in, took the sell side, immediately V-shaped recovery to the buy side, okay? If we do the same thing here, I want to take my projection from about 9. Okay, so now you have that projection, and if I'm not trading until 9:35, waiting for a pullback right here, down close candle, where might this go to? Just as a pullback, okay? You have this inversion fair value gap right here. This big wick is also technically a gap, but I like this inversion fair value gap. We can't even trade to the midpoint of it. Change in state of delivery right here. Boom. Okay. Stop loss, one tick below the low. You could even put it consequent encroachment of the midpoint. Projection 1 is at 1.4R. Projection 2, 3.5. You just need to have one contract running, and you get a family fortune out of this trade. Okay, but what if you missed this trade? You didn't enter in on the change the state of delivery. We broke a short-term high, and you still want to buy in on this. Okay. Let's take a look at price action here. What is this? Buy side imbalance, sell side inefficiency. I would say after we break this high, you could buy in on this bullish order block again. If you don't get this one, you could buy in on this bullish order block again. See how many entries you get? Stop loss, below low. Same bit of business. There. So even though this looks like, yes, you are buying at all-time high, at the high, I should say. Yeah, we broke pre-market high. We broke today's high. But you have a conviction of bullish prices today. So bullish order block, tap into, and then you get higher prices. And you just trail one. Trail one. Okay. That's all I have today. If you guys enjoyed this, please make sure to leave a like, comment. Let me know if this helped you guys at all. Let me know if there's anything you feel like I missed or that I should add into the next video. This is how to find your daily bias in price action. All right. Hope you guys enjoyed. See you guys in the next one.